Welcome back to Alpha Recap. I'm Riley. Markets closed and we're unpacking the big sector moves from May 13th. As always, if you have questions, you can reach us at stockalpha.ai. Jessica, great to have you.
Thanks for having me. Lots to get through. A cross-currents day where AI and streaming led, crypto bounced, and geopolitics and regulations stung a few sectors.
Quick snapshot to kick things off. Markets closed mixed. Technology and crypto finished the day up, while industrials, healthcare, and energy closed down. Retail and real estate showed pockets of strength too.
Right. It felt like a two-speed tape. Growth and momentum names did well, while policy and operational shocks created concentrated pain elsewhere.
So, what really stands out here is the headline mix. Bitcoin reclaiming levels above $81,000, a hotter CPI print of about 3.8% in the morning briefs, Boeing's $1 billion pledge to Kansas, and that huge profit plunge at Nippon Steel.
Yeah, that tracks. Those are the big storylines that moved flow and sentiment across sectors.
Let's start with the outperformers. Technology, crypto, consumer and retail, real estate and utilities were grouped as the top sectors. Jessica, break down tech and streaming for us.
Tech finished the day up thanks to renewed AI headlines and Netflix's upfront momentum. Netflix had ad and content news that pushed ad revenue expectations, and broader AI funding and product announcements helped cloud and compute names. In plain terms, more ad dollars and AI projects drove investor interest in parts of the sector.
So streaming advertisers and AI tools basically created a growth narrative. Got it. And crypto. Pretty notable bounce.
Bitcoin climbed back above $81,000 after the CPI print and some perceived more friendly tone from central bank leadership. Institutional flows showed up too. Movements tied to Chainlink and activity from some big financial firms helped make the rally look less retail only.
There was talk of a Clarity Act vote, right?
Exactly. Market participants flagged that pending vote as a potential source of institutional clarity, which can matter a lot for flows and leverage in the sector.
Short reactions.
Big move.
Not what anyone expected. Now, on the other side, underperformers. Industrials and manufacturing, healthcare and energy. Boeing's $1 billion pledge was a headline, but Nippon Steel reported a 95% profit plunge. That's a huge divergence.
Yeah. Boeing's capital commitment to expand narrow-body output signals management is leaning into demand and capacity. In contrast, Nippon Steel's collapse in profit tells you how cyclical pressures and input costs can wipe out margins. So within the same broad sector, you get both a growth commitment and a stark earnings warning.
And healthcare. The CMS enforcement moves were pretty direct.
CMS paused hospice and home health enrollments and deferred about $1.3 billion in Medicaid reimbursements to California. That's operational pain. It raises cash flow uncertainty for providers and increases compliance risk, particularly for smaller operators reliant on Medicare and Medicaid timing.
Not great for providers.
No, it can lead to earnings revisions if payments are delayed or enforcement intensifies.
Energy had a mixed day. Renewables and storage had wins, but geopolitics around the Strait of Hormuz pushed near-term risk higher.
Right. The project wins are structural. Grid storage and community solar are moving. But any reports of increased risk in the Strait of Hormuz make oil and gas prices more sensitive in the short term. That can ripple into materials, shipping costs, and insurance.
Okay, let's take a closer look at the day's biggest moves. First up, Bitcoin above $81,000. Jessica, why did crypto rally, and why did that matter for broader markets?
Bitcoin's bounce followed the CPI surprise and some perceived central bank comments that traders interpreted as less hostile to crypto. Institutional flows, custody inflows, and certain on-chain fee patterns signaled that big players were active. When crypto rallies like that, it often signals a broader risk-on impulse among funds that use crypto exposure, and that can bleed into correlated risk assets.
And the Clarity Act timeline was part of the optimism.
Yes. The potential for clearer federal rules tends to reduce perceived policy risk, which matters for institutions considering allocations.
Next big one. AI and Netflix lifting tech and media. Tell listeners what to watch in simple terms.
At the heart of it, AI is creating new ways to monetize commerce and advertising. Agentic checkouts, ad tools, and more targeted streaming ads. Netflix's upfront suggested stronger ad demand. That benefits ad tech firms, cloud providers, and companies selling compute. But it also brings regulatory attention on competition and content moderation, so it's not risk-free.
Got you. Now Boeing versus Nippon Steel. That contrast stood out. $1 billion to Kansas and a 95% profit drop on the other side.
Exactly. Boeing's investment signals a push to increase 737 output, which implies confidence in narrow-body demand and pushes CapEx and supply chain activity. Nippon Steel's collapse shows how input costs and market dynamics can crush profitability. Together, they illustrate asymmetric risk within industrials.
Short reaction.
Very uneven.
Healthcare enforcement. CMS pauses and deferred payments. Practical implications for providers?
Providers face higher compliance scrutiny and cash flow timing risk. Smaller home health and hospice operators can be particularly exposed. Analysts may revise near-term earnings if reimbursement timing changes or enforcement expands.
And the Strait of Hormuz developments. Those pushed short-term energy sensitivity higher, right?
Yes. Episodic geopolitical shocks like that can spike crude and gas volatility, but they don't necessarily change the long-term move toward renewables and storage. Instead, they introduce tactical price shocks that can hurt margins in adjacent sectors.
Let's cover the cross-sector themes quickly. 5 of them were highlighted in the notes. Start with AI and content as a structural growth engine.
AI and content are connecting. Streaming ad demand funds content. AI commerce tools change retail checkout experiences, and cloud infra supports it all. So you see ripple effects across tech, consumer, payments, and real estate, where data centers get bought.
Next, policy and regulation as a market mover.
Policy headlines moved healthcare, cannabis, crypto, and energy. The lesson: agency announcements and legislative calendars can create concentrated, short-term volatility.
Geopolitics tightening commodity linkages was another theme.
Correct. Shipping routes, insurance costs, and commodity price swings connect energy with materials and industrial supply chains.
Institutional flows and digital infrastructure?
Flows into crypto and data center land purchases point to where capital is moving. Digital infrastructure demand is a multi-sector story tied to labor and corporate needs.
And finally, earnings shocks versus capital commitments.
Yes, company commitments to CapEx can imply future growth, but large profit downdrafts show how quickly margins can swing. That creates asymmetric risk inside sectors.
Time for some actionable, informational insights. Not advice, but things listeners may want to monitor.
First, track policy calendars closely. Clarity Act timing for crypto, CMS rulemaking for healthcare, and state cannabis votes. Those items can drive concentrated volatility. Second, separate short-term geopolitics from structural energy trends. A shipping event can spike oil, but doesn't change years-long renewables growth. Third, reconcile corporate capital commitments with earnings surprises. Look at backlog, CapEx plans, and margin drivers rather than headlines alone.
A few more practical pointers?
Watch AI adoption signals. Add CPMs, cloud capacity notes, and platform monetization metrics. For crypto watchers, follow on-chain fee trends and institutional custody inflows. For healthcare, review provider exposure to government payers and potential reimbursement timing risks.
Short reaction.
Useful checklist.
Let's cover risks on the watch list. Policy and regulatory items like the Clarity Act vote and CMS guidance. Macro prints including inflation and PMI. Geopolitics around the Strait of Hormuz. Corporate execution from big industrials and tech. And liquidity issues in crypto and small caps.
Exactly. All of those could create either short-term volatility or longer repricings, depending on the outcomes.
Before we wrap, any quick takeaways to leave our listeners with?
Sure. 1. May 13th reinforced a two-speed market. AI, streaming, and parts of crypto showed momentum, while policy and company shocks pressured industrials, healthcare, and energy. 2. Policy timelines matter more than usual right now, so keep a calendar. 3. Separate tactical geopolitical shocks from structural trends like renewables and data center demand. And 4. Watch corporate capital moves versus earnings surprises for asymmetric risk signals.
Great summary. Quick filler. Honestly, I was a bit surprised by the breadth of regulatory headlines in one day.
I mean, when you step back and look at this, policy had outsized influence across several sectors.
Final quick note, this episode is informational only. We're not recommending any buying or selling. Analysts note that data suggests momentum in certain sectors, and listeners should consult a licensed financial professional for personalized advice.
Right. Objective framing only. Market context to help you prioritize what to monitor and research.
Okay, that's a wrap. If you have questions about anything we covered today, head to stockalpha.ai where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai. Thanks for joining Alpha Recap. I'm Riley.
And I'm Jessica. Thanks for listening. See you next time.
Yeah, absolutely. Bye for now.